how you build your portfolio, specifically what kind of characteristics you want for your picks?
At the moment, the characteristics of the portfolio is geared towards subordinated financials. Okay? We like subordinated financials because there is a strong deleveraging trend in financial institutions in Europe, and this is very well rooted. So this is a key element. So we like the financial institution segment, and within that we try to filter the universe for the best ones, and for that we have a filter. We want financial institutions which have tangible common equity of 4% or more, which means tangible common equity to assets is relatively strong and has to be above 4%. So we screen for that, and we retain the financial institutions which have above that, and then we analyze them, and if we're happy with it, we construct a portfolio with that.
After the rise of last year, do you still see value in subordinated bank debts?
Yes, I think the average spread is between 250 and maybe 400. I mean, the range is between 250 and 400 basis points, so the average must be 325. I think there is still potential, but of course the easy money has been made last year. But it's still decent valuations. They're not good, but they're not bad either. It's decent.
You think the systemic risk of a European bank failure is off the table?
I think it's off the table, definitely. The ECB has done a lot, has provided quite a lot of liquidity, but what people fail to appreciate is that European banks gather quite a lot of deposits every year, about 2% of total banking assets. So last year, in 2012, the European banking system accumulated almost 600 billion of new deposits, and there are no lending opportunities. The key risk for financial institutions and banks is a problem with the liquidity, where they cannot fund themselves. But now, with the LTRO and the increased deposits, there is no risk of funding at all. And for example, Banca Intesa was successful in raising customer deposits 6% last year, and they have very little opportunity to lend. So the funding profile is very strong at Banca Intesa, and the bank has said that it does not need to issue new bonds this year.
Do you see value in small peripheral banks debt?
No, I think we have to keep with the big systemic banks, so to speak, the large ones. The large ones have basically the opportunity to fund themselves. They're able to gather deposits. I think we should still be a little bit on the safer side, just in case.
Considering the rise of European bank debt last year, don't you see there is a risk for investors to go lower into the capital structure and invest lots of money out of fixed income into equities?
No, perhaps not yet, because really the economic growth is not there in Europe. You have to differentiate in the economy what is macro, what is micro. On the macro front, it's not that strong yet. So because of that, maybe there is a risk that equities do okay, but it's not for sure. On the micro level, the banks are doing well. Asset quality is basically been stabilized, and in terms of funding profile and capitalization, things have improved. But because of the weakness in the macro part of the picture, I think it's perhaps a bit too premature to foresee basically investors moving and rotating back into equities. When we see a bit more stabilization on the macro front, that will be a potential theme, but I think it's a little bit early for that.